In this video, traders are going to ask the question, is gold really still a safe haven? Stay tuned. Hey guys, warm welcome to you. So is gold really still a safe haven? I'm not so sure. Let's have a look at the evidence. Now, this is something I've been thinking for a while, and I've made this I've spoken to other traders about it, and I said, you know what, I think gold isn't what it was. You know, what's the point in gold anymore? Who wants to store bullion in a vault? Now, people say, well, you can trade the ETF. We'll come on to that in a second. You can trade the futures. We'll come on to that in a second. The whole point of gold, traditionally, forget about speculation on direction of something, because that's something completely different. But if you're buying gold from a non-speculative perspective, you're buying it because you believe that it's a safe haven asset. You believe, especially if you're buying the bullion, that it's going to protect you during bad times. You want to store that asset in some form, and that is bullion. Now, that kind of made sense many years ago, when if the whole system crumbled, you still had that bar of gold. It was worth £100,000, and you could exchange that eventually into cash or something. Now, of course, if it's full Armageddon, if there's full nuclear war, and all you're sitting there with your bar of gold, you would much rather have a cellar full of baked beans and water and any other medical supplies you need than a bar of gold. So we could take it as far as that if we wanted to. But then the other thing is, now in this day and age, as people are using less and less coins, fewer and fewer coins, you know, the storing value in a big heavy piece of metal seems kind of almost backward. And I know some of the gold bugs out there are going to be like, no, dislike, but hear me out on this one. So there's that. Well, physical store of wealth seems to be, you know, it just doesn't seem to make any sense. You can't use it. It doesn't pay you a dividend, doesn't pay you a rental. There's no value out of it. Whereas if you look at, let's say, property, and this perhaps is why property price has gone up so high, specifically in the UK and London, the store of wealth is a tangible asset that can be used, and it can be used if there's a crisis. You can use it for shelter. You get an income from it, so it's got some value to it. It's paying you. It's not just sitting there and just fluctuating based on the price and not paying you anything for it. And it generally has an intrinsic value regardless. Yes, property prices can go up and down, but so can gold prices go up and down. Has an intrinsic value that's there regardless of what the rest of the economy is doing. So that property is just one. There are many other things like that where you can think, well, actually, is gold the right thing to do? And then you look at the evidence, okay? And you say, well, okay, 1987, gold rose 5%. That's not much considering the catastrophe of 1987. 1998, we had a little bit of a wobble, 2% on gold. Nothing really. Look at 2008, from peak to trough, we went down 30%. We rallied a little bit back up, but in 2008, we really didn't see what we should have expected to see in gold, which was a lot of buying. You know, I mean, there's a catastrophe, there's a crisis. That's the whole point of gold. If we're talking about it from a safe haven perspective, not just directional, then people will allocate assets into gold, and that should lift the price up. In actual fact, everyone was liquidating everything they had to generate cash. They went back to actual physical cash. They put it into banks, they took it out, whatever it may be. Yes, I know banks were failing and that still wasn't great, but there was still some trust in the system somewhere, and people thought, you know what, I need to be able to divert it into other assets. Maybe they were diverting it into whatever, but the point is it was coming out of gold when it should have been going in. That number should be plus 30%. When we had that severe crisis and there was no credit, the credit crunch, the banks weren't even trusting each other, gold should have been absolutely spiking to the moon, because everyone, theoretically, if this safe haven thing rang true, get all your money out, stick it in bullion, stick it in the vault, let's see what happens. Then you would feel that you're safe, but that just didn't happen. So why is that not happening now? Is that just because, like I say, we're looking at gold thinking, well, it's a bar of something. Does that really make sense? Is that really the best place to put my money? There's other things as well, like Bitcoin. Now, I'm not saying Bitcoin is an alternative to gold in the sense of the amount of money that's flowing around in gold, but there's still a lot of people who want to kind of get out of the system and are looking at these digital currencies and digital assets. I'm on the fence with this in terms of, you know, safety and security. A little piece of paper wallet versus a gold bar. Probably a gold bar is safer, but, you know, it's easier to store a large amounts of money on a Bitcoin wallet. Well, I guess it is potentially. You know, you can have a wallet key and you can have £1 billion in it. Gold, £1 billion in bullion is going to take you up a lot of space, storage space. Of course, you've got to ensure that. You've got to pay for storage. It's actually the opposite way of an asset normally giving you money. You've got to pay out for it. So it's kind of like a parasite asset. So Bitcoin, you know, I put a question mark here because I don't believe it's a specific competitor, but there are things like that that are coming up now where people are allocating wealth to rather than gold. And then we look at this, and this is an interesting point. There's no way to judge value. You know, you can't decide whether you're overpaying or underpaying for gold. And yes, that could be said the same for many things, but we're sticking with gold here now. It doesn't produce you a yield. So exactly for a property or for a company for buying a stock, there's a dividend yield there, there's a rental yield. You say, okay, I'm paying 200,000 for this, I'm getting X pounds per month. That's 7% per year, 6% per year, 10% per year, whatever, that makes sense. If you're buying something and you're getting 1% per year, and inflation's running at 2%, you're like, well, I'm overpaying for that asset. Specifically, if you don't think the asset's going to rise in value. And that's the point. We've got to strip those two apart. You've got one is a speculation on the rise of the asset. The other is the asset as a store of wealth. And a store of wealth shouldn't be something that you're overpaying for, because ultimately you're going to erode your wealth if you're overpaying for it. So it's hard to judge value. It just sits there, nothing happens. Now, it brings me to the ETFs. A lot of people say, okay, you've got these ETFs now, that's changed the game, people are buying the ETFs. Well, there's something that if it's genuinely a safe haven, your ETF is going to be worthless. Let me tell you why. Number one, you have a counterparty. The whole point of buying gold as bullion is that it's there, it's yours, you've got it. You don't have to trust anybody to go back on a deal. It's there, you've got it. If you're buying an ETF, you've got a bit of paper that says, hey, I've got 10,000 shares of GLD, which is the gold ETF. If the counterparty to that trade, i.e. the exchange, the ETF company says, you know what, we're going bust, we can't afford to pay out, then you've got something that's worthless. The other thing is as well, which many people don't know about GLD, some people say, well, I can buy it and I can then eventually exchange it into gold bullion. Yes, GLD is backed by bullion, but they'll only allow you to exchange it for bullion if you've got over, I think it's $1 million worth. So that's that. But there's also a little bit of small print last time I checked that basically said we reserve the right to settle you in cash. So ultimately, all you're doing when you're buying the ETF, you're not being clever and buying potentially gold that's going to come to you. You're basically buying or speculating on the direction of gold. Same with the futures contract. A little bit different in terms of delivery because you guaranteed a physical delivery. However, you still have a counterparty, so you're still speculation on direction as opposed to being the safe haven. Who's to say the futures exchange doesn't go, you know what, we're just closing the doors now, we're not allowing anyone to do any trades, and expiry is going to be delayed and you'll have to worry about that later. No one's going to deliver your gold then. So it's kind of this situation. And the big one for me is, you know, when I watch the markets day to day, week to week, month to month, and I see, you know, panic coming into the markets. Years ago, you might have seen a little bit of inverse relationship to stocks and gold. I know it's kind of uncoupled a bit here, but you would almost see that inverse relationship being there. Now, I don't see it at all. I see stocks getting hammered, gold doing nothing. Maybe gold rallies a little bit, but it's not a given anymore. It's not a case of there's always money flowing out of stocks into gold and vice versa. So it begs the question, what is gold going to do in the future? If it's not a safe haven, does that mean that people will gradually sell their holdings and shift to other things, which will put pressure on the price? Does it mean that people just hold what they've got and then the money they want to put into in a safe haven will go elsewhere, so it will stagnate in price? Or does it think, or will happen, it will rise in price because people will think, well, it's not a safe haven anymore, but I'm just going to speculate on the direction of it. Now, I potentially lay more on the bearish side of it myself, and that's just my personal opinion. I think that over time, it will erode its safe haven. This is not going to be, we're not going to talk about the next 6 months or a year. Over a long period of time, it will erode its value as a safe haven asset. People will hold less and less of it. They'll think, why am I holding bullion in storage? And then ultimately, the price will decline, it'll become less liquidity. And of course, the less liquidity as well, people can't move big amounts of money. If they can't move big amounts of money, it reduces its usefulness as well as a safe haven. So I think those things combined, we might see over the next kind of 5 or even 2, 5, 10 years, gold drifting down. I'm interested to hear your comments on that, guys, in the comment section below. Do you agree? Do you disagree? Do you think my argument's wrong here? What have I missed out? Have I said something that doesn't make any sense? Have you got something to add? comments in the comment section below. All right, guys, is gold really still a safe haven? Who knows? Take care. Bye-bye.